once again, if I had to guess how much you want to bet, they're all biotech. Look at the volume. The volume ain't even worth looking at. No, it's not bad. So once again, this is an information technology company. But man, look at this. Jeez Pete's. Across the 200-day moving average, you're down about 90% if you bought back then and didn't sell when it crossed the 200-day. So if you had 10 grand, you still got about 1,000 of it. So this little pop, I don't think really means nothing to you. But let's see here. I mean, this thing looks like a pump and dump multiple times. Guys, I'm doing this and I don't want to trash anybody. If you're trading these kind of stocks, I just hope you're making money. If not, if I say this stock is trash and you own it, don't take it personal. It's not personal. But look at the chart, right? I want us to be in the same team on making money, and I want to educate you so you don't make the same mistakes I made 10, 15 years ago, 20 years ago. All right, these right here are just straight pump. I mean, this thing was up, so it's up 145%. So if we go all the way to the top, I mean, right. Oh, looking at the wrong spot. It was up as much as 234%. So that means people were buying this up 234%. They could have looked at the chart and seen the same thing that happened back here if they would have bought. So these people that bought up that high, they're down 70%. They put 10 grand in it, they're down to 3. They put 1,000, they're down to 300. Guys, buying stocks like this is an easy way to burn through your money. Buying stocks under the 200-day moving average, even good companies, is an easy way to burn through your money. This is all for educational purposes and just my opinion, but I'm sticking to it. Biopath, here we go, healthcare technology company. Once again, barely crossed and held the 200-day moving average there, but as soon as it crossed down, I mean, you're another 90%. I mean, people's just getting their portfolios taken out. So, I mean, if you bought after this huge dump, I mean, geez, Pete's. You're talking about 22% loss there, 50% loss there. I mean, people just got hammered. But guess what? It popped 90% today, and that's probably got a lot of people excited. A lot of people probably bought this at $1, lost 25% like that, and hoping it goes back up. Guys, there are way better companies you could be putting your money in than companies like this. This is a gamble. This is a dream, a get rich quick, hoping to turn a few bucks into a large profit. That's what I spun my wheels for 15 years doing, until finally, on my knowledge of studying charts, looking at the market, became wisdom, and I stopped doing things that weren't profitable. Yeah, you might make some moves like this, but I guarantee there was times I made 200 or 300% gains back to back to back, and then my dumb butt would lose 80%. So it don't matter if you turn 5 into 10 by making 100%, then you lose 80%, you're back down to 2. Doesn't matter. Look at one more of these. Yeah, I mean, all of these are, well, I mean, this is one that's actually, gee, unless you bought back here, been about even for 2.5 years. And then it pops up today, 91%. Let's check the news on it real quick. Let's see what happened. So yeah, somebody bought it out. So if you had patience in this for 2.5 years, or bought, maybe there was some rumor here, 90% on a buyout. But guys, actually getting in those versus the ones that drop like a rock, it's very rare to get into those compared to the ones that lose. But whoever made money on that, congratulations. Killed it on a 90% gain. I'm sure whoever sold the day before is salty. Got this right here. Guys, I don't like anything that hasn't established a 200-day moving average. You can see this stock's pretty new. Let's look at the biggest losers. Again, 100% loss. Wow. So this went straight to zero. That's crazy. That's what happens when you play with penny stocks. Like it got pumped up here, 630% gain there. So people were buying that up. Man, I'm sorry for your losses. Guys, I'm doing this just for examples and a learning, educational purposes. I mean, that was one heck of a ride right there. And then that ride came to an end. It looks like it continues coming to an end. Yeah, another buy. That's it. So let's go into the ICAP 1000. Those are the stocks I like to look at. These are the ones we're going to be in. Real companies making money. There are some in here that have 0 P. They're not making any money. I won't even trade them because I look at the chart, see if it matches my buying criteria. If it does, then I look at the fundamentals. Right? I look at the PE, make sure they're making money. If something would happen, I get stuck in a company for 10 years. Let's say the market closes, like Warren Buffett says. Hopefully, you've read The Intelligent Investor as well. I want to make sure it's a company that's making money and paying a dividend. Stock market opens back up, your money should be okay. It's a theoretical situation, but you get my point. I don't want to own a company that ain't making money, speculative, all that bull crap. So here, this is an oil and gas company, which has been killing it. By the way, you missed going over oil when I said the overall market. Oil we've been talking about for the last week as well. Check the previous videos. I got oversold here, which I've said I probably would have waited to hit the bottom Bollinger Band just because there was a big gap there. Usually I like when it's oversold, it hits the bottom Bollinger Band. Right? I know people that just trade just on the bottom Bollinger Band alone. I actually used to, and then I added in my stochastics and kind of put them together. But let's say you bought there because it was oversold, and we teach to keep enough cash on hand to lower your average. So usually probably go 20% to 30%. So you should have been able to add 2 to 4 more times in this. So you got your average here. Right now you should be up 5, but it is an ETF, so we would have been in a leverage version, so you'd probably be up 10 to 15%. As a matter of fact, I came out with a short video saying I'd be buying it up right there after that drop if I already bought that. I usually don't touch them until a day or two after a gap down, just because gap downs carry momentum, and all this is stuff we'll go over in some more educational videos. But also yesterday, I said I could see oil breaking this high, or at least touching it here soon with everything going on and it coming out of the oversold territory. And then bam, we popped 5% today. That's a rundown on oil. So I don't see that. That's actually your most bullish sector in the entire market. You look at the chart, it's your most bullish sector in the entire market. So that's one of your biggest movers today. Moved, I'm sure, on oil. I'm sure that move was on oil, Marathon. Now see, this is what I'm saying. Sometimes you'll see them drop under the 200-day moving average, and they'll bounce back up. But also, I'll show you my latest example, the one I exited under the 200-day moving average, Raytheon. Had this in my long-term account, bought it ex-dividend right here, so I got the dividend. It dropped under the 200. I sold, still got my dividend later. And, had everybody dogging me, oh, you say you shouldn't sell. They got up this high. People's like, oh, how you feel now? It was a big percentage gain. And I moved my money in BWXT, which is up like 30% since then. But look at it, it couldn't hold the 200-day. It tried, broke back down. So I saved myself 25% loss and put my money in a bullish chart, BWXT. I want to say that was right around this time frame. I bought like crazy every dip once it hit that area right there. Yeah, oversold right there. And that position was every dip. I meant every day after that dip. This is a company I'm got all my custodial accounts, plan on holding for a while. Check out Trezo Fuel, Project Peel, just nuclear energy as a whole. And that was up 23%, that buy. Been buying this stock since January and telling people it's a buy. So that's a 50% swing. So that's the difference on a 10 grand account of 5 grand. So I'm not mad at myself. Every once in a while, ooh, what stock was that? Every once in a while, you'll see that. But that wasn't a bullish chart to get in anyway. I mean, look at that. MPC, I actually alert. Let's see what that is. Yeah, when oil pulled back, that was when I said I buy. I'm surprised I didn't rally more than 5%, but I mean, you want to look at the bullish charts. Let's go back and look at MPC to see how that chart looks. You see how that chart looks more bullish than MRO? So this would be a chart I'd be buying on pullbacks. All right, look at a few of these, and hopefully you guys enjoy your Friday. So this one right here, look at that. One of the biggest losers is overbought, ladies and gentlemen. Time to take profits. We bought that there, locked in profits. Listen, if you don't take it, that was a 15% gain right there. I missed that? Yeah, 15% gain in 16 days. It's a nice gain. But if you don't lock in your profits, somebody else will. Take your profits. I mean, unless you're just dollar cost averaging and holding for 10 years. XPO, trucking company. See, these are the swings. These are the charts I like. Oversold, overbought, 15% in 7 days. Lock it in, let it pull back, rinse and repeat. Once again, I mean, this is like clockwork. Like clockwork. Let's see this one. And I really like that chart. Another 16%. And all these took place when the overall market was overbought. So SPY might have got 3% out of that. On the leverage version, you might have got 9%. But those other stocks, you've seen 15, 16% gain. Those are what I look for when I scan.